Is it just me, or do you guys feel somewhat like proud parents today? And I don't get emotional with my trading. I put no emotions into investing, but I think it's kind of hard not to, watching AMC just dying every single day. Not the trade, not the movement, but the share price. And to finally see a green day on such a red day in the broad markets is very encouraging and makes me very happy as well. But here in this video, we do have to talk about the mega bounce, and there is no other way to put it. We are coiled up like a spring to the downside, and we're about to pop to the upside. And I want to go over this whole situation as well as what the market's expectations are for the Fed meeting tomorrow. And if you guys are still concerned about basically what's going to happen with AMC and the broad markets tomorrow, I think today and tomorrow leading up to about 2 p.m. when Fed Jerome Powell does speak, that is going to be peak fear. So we are almost out of the real danger zone, I would say. I don't think we're going to see a lot of fear after the Fed meeting. I totally could be wrong. So I think this video is going to be very exciting for most, but do not get carried away with everything that I am saying. We could see a significant down day tomorrow as well, or even on Thursday, but it's highly unlikely, and a lot of experts are not thinking that is going to be the case. So let's dive into this video, guys. Hit the like button for me, consider subscribing to the channel, as well as check out the pinned comment down below, as well as the link for Public. I've been buying a ton of AMC shares over on Public because my orders go straight to the lit exchanges, and just signing up in about 2 or 3 minutes time, you get a free share worth all the way up to $1,000 per share. So you get some free money, you help support the channel, as well as send your orders to the lit exchanges. It's a win-win-win-win for everybody involved. Now, let's get into all of this key information. We're first going to start off with the market expectations and the Fed meeting. So take a look at just the title of this video from CNBC. Survey respondents see Fed doubling speed of taper. This is widely priced in by market participants, this very hawkish stance on basically cutting out stimulus. And if you guys are unaware of what the tapering is, the Fed has been buying $120 billion of treasury bonds and mortgage-backed securities to keep rates low and to keep demand for these assets high. What they're going to be doing is they're going to be decreasing the rate of how many they are buying per month. So they're expected, or at least what they had said the last Fed meeting back in November, they were going to start tapering $15 billion less of bond purchases per month for the next 7 months to drive that down to virtually zero. Now markets are expecting them to decrease that by $30 billion per month. Even if they do announce they're going to decrease this by, say, $45 billion per month, I think the markets will still act and react bullishly to that. The one thing, and the only one thing, mark my words, that will cause a big market move to the downside is going to be if the Fed comes out and says, hey, next month we need to raise our Fed funds rate 0.25%, or just raise interest rates. That's the more layman term to say that. Raise interest rates 0.25%, or even in February or in March. That could send the markets down a little bit. I think that's somewhat priced in, but it's definitely not on most people's minds. So if that does come out, I think there's a 10% chance that that kind of verbiage is announced. Then expect to see more pain and a continued downside to AMC and the broad markets. But if Fed Jerome Powell is hawkish and doubles the speed of tapering, or even triples the speed of tapering, expect that to be a bullish response from the marketplace. And as we do know, that is the reason why AMC has been dropping so much, is because of this Fed tapering. And take a look at this bounce that we are seeing right now, up almost 6%. We were only up 3% at the start of this video. We are seeing some incredible volume, some FOMO buyers that are heading back into the stock, and what a beautiful sign that we are seeing right now. Just on this candlestick, 700,000 for volume for 1 minute. That is incredible. And I do think you're seeing a lot of people, a lot of apes, I'm not even going to classify you as apes, rebound apes, right, that are coming in and buying the stock yet again because it's up 6% and the markets are down over 1% on all indexes. So I do think you're seeing that going on, but this mega bounce goes a whole hell of a lot deeper than that. So on top of basically the bullish reaction that we are likely to see from the marketplace due to the Fed being hawkish but not super hawkish, and the fact that the markets have already been selling off, we're overdue for a major bounce. This really comes down to mostly, I would say, the option chain. And this is where I was saying we're basically coiled like a spring. That's the best way to put this, because we have seen so many puts go from out of the money into the money over the past 2 weeks, and so many puts go from in the money back out of the money. Take a look at these numbers, guys. We've been waiting for this date for months now. December 17th, that is this Friday. We're looking at calls out of the money, 411,000 calls, 22,856 calls that are in the money, whereas out of the money puts at 163,000 and in the money puts at 129,000. Now, all of this whole mega bounce, and why I'm saying this, because I think it's going to be a sharp bounce. I think we're going to get a big move to the upside Thursday and Friday, possibly even tomorrow after the Fed meeting. And why I say this is because 2 days left to expiration. If you are seeing this amount of contracts, specifically puts that are in the money, and those start to run out of the money, they basically have to get de-hedged for all at once. You're going to see some incredible volume throughout the rest of this week. And if, let's say, even half of these puts, half, 130,000, let's say half, let's say 65,000, I believe my math is correct there, 65,000 puts run from into the money, out of the money. That controls 6.5 million shares that will have to be bought. Let's say 100,000 calls run into the money. That would be 10 million shares that would have to be bought. If you're seeing 16.5 million shares that have to be bought in 2 days, that's a very high amount. Now consider this. It's not about how many shares that have to be bought. It's about the pace in which they have to be bought, or how fast the de-hedging will have to occur. In 2 days' time, that de-hedging will have to occur basically at the point these contracts run from into the money out of the money. So you're looking at a lot of buying power that is going to happen by the market makers. If we do get a Fed Jerome Powell that comes out and says, hey, we got to start cracking down, we got to raise interest rates, we got to go crazy with this, then yeah, forget all of this information. It's not going to make a difference. But what I'm saying here is we have a lot more bullish things going from us as far as where we are at right now after going down so much, at least on the option chain, the technical analysis, and the overall market sentiment, than we really do have going against us right now. And that's the biggest thing to know. I hope you guys are excited. It's not to say it's 100% going to happen. I think it's about 80% likely that we do see this mega bounce by the end of this week. But I am not a financial advisor. I am not a financial planner. I am not telling you to buy, sell, hold, or trade any securities. That is up to you guys. Come to your own conclusions. This is only my insight and providing you guys the due diligence. I'm not making this up. This is the facts. This is the numbers that we are being presented, and I'm just doing my best to give you guys this information. Now, as far as the Ortex data, this is very encouraging as well. This is not even factoring into this whole mega bounce situation or equation that I'm presenting to you guys. We're looking at the short interest that is exploding. 19.34% short interest of free float, 99.22 million shares that are sold short. We know these numbers are quite conservative, so the real numbers are well over 20%. That's very obvious. We've been a falling knife straight to the downside. This is not just because a couple people here and there are selling their shares. This is due to hedge funds taking out additional short positions on AMC, and that is very well known, right? That's pretty much a fact at this point. Also, the share utilization is 76.24%. Doesn't really matter. Who cares about the share utilization at this point? And the days to cover at 2.33. So even though we do have an increase of volume over, the past 2 weeks than what we've seen the last week or two before that, you're still seeing a days to cover at 2.33. That means if all of these shares wanted to be covered, it would take 2.33 days to do so. Even if a small percentage of them wanted to be covered, it would still take 2.33 days to do so. So this is very bullish. This is much, much better than seeing the days to cover at, say, 1 or half a day. I would like to see this at 3 or 4 or 5 before the MOAS actually does happen, but still, this can cause a lot of pressure for the hedge funds when they actually need to get out of their positions, because they will ultimately have to pay more to get out of these short positions, because everybody's trying to get out all at once, and there's not enough shares that people are willing to sell for the hedge funds to buy back to cover on. So hopefully that makes some sense to you guys. Very bullish, but this is not even factoring in. I'm not even accounting for a lot of the shorts actually covering over the next 2 days. Obviously, some shorts are going to de-hedge for if they are smart. If not, they are in for the full wrath of the retail investors and the MOAS when it ultimately does happen. Now, back to the move that we're seeing today, up 5.31%. This is a very strong move. This is showing you guys, if nothing else has, the movement is still here. The trade is still on the table. I'm not your cheerleader. I'm not here to sell it to you guys. This is only what is happening, right? I'm not making this shit up. AMC is up 5.5% as the markets are bleeding and somewhat dying today. So great thing to see. Let's touch on the technical analysis. If you follow this channel, we don't get into all the candle starts, patterns, and movements, and all that good stuff. Doesn't matter with AMC. It matters with some other stocks, technical breakouts, all of that. Not with AMC. The only three things that matter, and I throw support and resistance into one category. So support, resistance, moving averages, and volume. So let's take a look at all of those things. So what are we looking at? Support levels. Well, $20 per share has been drawn out for a very long time. What happened? We came down $20.80 per share. I believe intraday we were even lower than that. Let's take a brief look at that. Yeah, hold on. I think in pre-market, we hit $20.27 per share. What do we see? A sharp bounce from that $20 level. And that was a given. I've had that level marked for a long time. People were talking about the gap fill to 1750. I was not as convicted. Not saying it couldn't happen tomorrow, but we would have to drop almost $5 to see that tomorrow just to hit $20 per share. So I think that is pretty much off the table at this current moment. I mean, that'd be a 20% drop, so I hope it doesn't happen, but it could. I'm not going to say it's not going to happen or it couldn't happen. It's impossible. Very, very improbable after this bounce that we are seeing today. So watch the $20 level to hold up support, and then the $17.50 if we do, for whatever reason, break down under that after tomorrow and after the Fed meeting. As far as the upside, which is going to be much more likely to actually break out past tomorrow, is $26.50 per share and then $28 per share. If we break out past $28 per share, that puts us in this range we were at back here December 9th and December 10th. That's what I want to see. And then to ultimately retest the 200-day moving average at $31.98 per share. I think with this mega bounce, we could actually hit $35 per share by the end of the week. That's a $10 move from where we are currently at. I wouldn't make any trades based off of that, but I think the data here is definitely telling us a clear picture that that is very possible when we see this rapid de-hedging and the amount of shares that do need to be bought in such a fast, or I should say short, amount of time. So hopefully this makes some sense to you guys. Hopefully it does resonate with you. Volume is at about 89 million shares. So we've been continuously going up. If we see another increased volume day tomorrow, I do expect the price to reflect that and the price to go up as well. It's all going to come down to what Fed Jerome Powell says. So all of this could be very important or it could mean nothing. Take that with a grain of salt. Take it for what it is. Just give you guys my honest, open, and transparent opinion into this situation. So if you guys like transparency, you guys like honest opinions, hit the like button for me. Consider subscribing to the channel. Leave your thoughts down below in the comment section. What do you think is going to happen? Congratulations to all apes that have held on to their shares over this bloody falling knife sell-off that we have seen. Love and appreciate you guys. Thank you for watching this video. Until next time, I'll see you in the next video.